Hey traders, it's Leaf West again for my second video. This one's on the spider, and I'm going to go through not so much my view of what the market is going to do in the short term here. I'm going to do a blog posting on that later tonight, but I'm going to talk about my afternoon trading plan and how I originally formatted that or formulated that, and then what I was looking for in terms of monitoring that and deciding what what changes I needed to make to my plan. So I'm actually going to show you the charts I use in my blog postings. The first one here is from my original afternoon plan, and as you can see, here's the Thursday high, and I was looking at it, and here's the gap, the $1.40 gap or $1.50 gap we had this morning. So I was looking at it as us having made one move down, a bearish flag sort of second wave, and then a potential sort of third wave, and then looking to make a sort of five wave full move down for the first bigger wave structure off of the high. So after morning was basically over Eastern time, I looked at the levels I could expect for these sort of waves to unfold, and lo and behold, when you measure the first wave, price came right into that target zone. So that was pretty much on schedule. So I was thinking that since market wasn't really dropping at all, that it looked like it could bounce. And where would it bounce to? Well, I drew our retracement grid up here and looked at the level price, and that's where I came from with that. And then for the final push down, I think I just did a look at the second wave downward to get to my third level target. And that made sense. It all made sense to me because this push down this morning created a big new momentum low, which after a corrective bounce implies that at the minimum you're going to retest the lows of the day and most likely go and push down to a new lower price. So that it all sort of made sense to me. A little while later, I posted an update to the afternoon plan, and in that, what had happened was price had bounced off of the lows, and if I looked at sort of this being as a key pivot area, I put up a retracement grid, and we bounced right into the sort of 61.8% retracement area, and then rolled over and made a new low. So that was pretty bearish looking. So to me, the market looked weak. It looked like it wants to go lower. We actually pushed down right to the 2.33 Fibonacci level from the opening range, and bounced from there. So that's to be expected as well. So what I was looking for now, since we had broken the low of the day, the one caveat was the momentum wasn't confirming this new low, so I was expecting a pretty good bounce. But what I was looking for was this 38.2 or the 61.8 level of this contraction pattern or key reversal pattern to provide resistance and for the market to roll over. And that was where I was looking to go short, and hopefully break the low of the day and make a push all the way down here to the target of 125.83. So that's where I changed from my first. I originally thought that the lows we had made earlier in the morning were holding, and we would bounce in there, but we didn't. So that's what the change I had to look at for my plan. And then after we bounced from that level, that Fibonacci support level, we actually showed pretty good strength. And this is what confused some people, in that they thought I was changing my view of what the market was going to do in the afternoon. And I hadn't done that yet, but I had looked at the possibility of that because the move here showed pretty good strength actually. We pushed up into the previous range of price and made a top and then corrected, and we only corrected about 50% of this move up from the lows. So that showed pretty good strength. And then we broke that high and we pushed up to around the high of the day and made a second top before we started to retrace. So I drew a retracement grid from the low to the high to monitor this pullback, and if we were going to reverse direction for the day and possibly trend higher and close some of the gap from this morning, I was looking for support to be held around the 61.8% level, which was right around moving averages, right around the weighted average price for the day. and potentially if and that was right on the top of the first bounce, and at worst the 78.6 level to hold and the price to move higher than that. So for me, that's what could possibly happen. But the fallback to my original weaker pattern was if we broke this level of the bottom of this B wave at 126.72, that opened up again the possibility of further weakness and a retest of the low of the day, and possibly moving to the low targets that we had on the earlier forecasts. So I didn't change my viewpoint. I was just saying this move looks stronger. This move here looks cleaner and stronger than the whole corrective mess from first thing in the morning. So that was telling you that possibly the market really was changing its structure and was going to move higher. So you have to be aware of that. So here's a 3-minute chart now. After we made this high, that's a potential key reversal point. So I draw my retracement grid and projections off of that, and I wait to see what price is going to do. So to me, the key level again was the bottom of this wave B, and ideally the 61.8% is a level that would gain support, and you'd move higher off that. I'd like to see lots of action above this 38.2% level between the high of this pattern, this key reversal point, and the 38.2% level. Lots of candles in that area, lots of support off the 61.8% if we were going to move higher. And what happened was we got into the middle of this pattern. We did some chopping. We came down. We actually broke out, but we made a doji here, which it can happen. You can get a fake out, and you could. Now, what you would like to see is if price had moved up in a sort of straight fashion, got back in this area, showed that it wanted to go higher. That would be the point to go long. Not guessing that we're going to reverse off here and we're going to make it through the top part of the range. All you can do here is exactly what happened. Is you could get a weak bounce to the middle of the pattern to the 61.8% level, and then roll over, which is what we did. To me, the key point was the 61.8% level, but it was the top of this sort of A pattern as well. When we broke that with these candles here, that was when I thought that potentially we could move to lower prices. So when we bounced off that, basically couldn't hold above the 61.8% level, and then reversed down. That's the spot where I got short for the afternoon trade. And my target was not this first target, because that was right at the low of the day. I thought if we're going to go down to the low of the day, we're very likely going to push through that, and then I would be looking for a bounce off that. If basically went down, made one candle or two candles lower below that, or right around that price level, and started to move higher, that's where I would have covered my short. Because what could have happened then is you could have been found support at the bottom of the low of the day, and then moved up higher for the rest of the afternoon. So my actual target was based on the Fibonacci levels of the opening range, which was at 126.09. So that was my target that I was shooting for, which was a little bit not quite as low as the second level of the contraction pattern, and that's where I covered my SPY for the trade. So it was a good trade. It didn't unfold exactly how I thought it would unfold. I thought we'd get a stronger bounce and then a corrective move, but I wanted to go through the process to show you the things you look for when you're watching price. And we moved basically right to, this time was right at, what was that, about quarter to three, quarter to two, and then we made this sort of lower high at just before 3 o'clock. So that's right where you see if the market's going to roll over. That's right where it's going to start its rollover. So it worked out pretty well. I hope that helps some people. Thanks.